Today we are going to see everything about T2T stocks or trade to trade stocks. So what does T2T stocks actually represent? We are going to see what it actually represents. We are going to see the criteria of transferring the specific set of stocks into T2T segment, and we are also going to study as an investor what are the key things, what are the key three aspects which you need to know when you're doing transaction on a T2T segment stocks. So first things first, so please share and subscribe to as many friends and relatives as possible so they can also understand before they invest into a T2T stock segment, they understand what actually T2T stock actually represents. So as I explained earlier, T2T stock actually represent trade to trade stocks wherein any purchase or sale has to result in a compulsory delivery of that particular stock. That means intraday squaring of positions are not permitted on a T2T stock. The reason is because it could increase the speculation on such kind of stocks. So what are the criteria? What is the criteria? As I explained, the second point which we are supposed to discuss in this particular session is about discussing the criteria of transferring shares to a T2T segment. What kind of stock, what kind of companies actually become part of the T2T segment? What are the criteria defined by SEBI which makes it the governing rules for making that particular company or stock becoming part of a T2T segment? Let us see some of those criteria. The first criteria is about the market capitalization of the stock. The market capitalization of the stock should be below 500 crores. Only then it would be part of a T2T segment. The reason because is they want to curb speculation on such vulnerable stocks, as because of the sheer small size, they could be vulnerable to price manipulation. So in order to avoid price manipulation of such kind of stocks, they are becoming part of the T2T segment, which have certain kind of rules and regulations to make variations in such kind of segment very minimum. The second criteria for shifting stocks into a T2T segment is when the P ratio in comparison with the index is almost twice of the index. If it is twice of index, the criteria is that they will have a review of such kind of stocks and those will be part of a T2T segment. The third criteria, the final criteria of being part of the T2T segment is about the price variation of the stock. The price variation is more than 25% with respect to the Sensex, then that will be benchmark and it will be shifted to the T2T stock. So now just to remember one more thing is that T2T segment stocks, they are generally not available in the F&O segment, that is the options and the future segment. Such kind of T2T segment related stock would not be part of the F&O. So in other words, whatever stocks are not part of the F&O can be considered to be part of the T2T segment. So what as an investor, this is the third aspect which we are supposed to discuss. The third aspect is to understand as an investor what are the top three things you need to understand before you start trading or investing into a T2T stock. So one of the foremost thing which you need to understand as an investor is that when you buy a stock that is under T2T trading, then compulsorily you have to take delivery of the stock as I mentioned earlier. So that means you have to pay the stock value or the price of the stock, the total accumulated price by end of the day. Otherwise the broker will have to sell your shares on the T plus 2 day. That means after the second day in the market, it will sell whatever shares, and whatever losses are incurred, it will debit it back to your bank account, and it will also include some penalized amount to you. Similarly, when you are selling the particular T2T stock, it is important to check that you have already the stock maintained in your demat account. Only if it is available in your demat account, then only you can actually sell the particular stock. If you are unable to take delivery or give delivery of the stock after on the second day, then it could result in lots of losses apart from the penalties which SEBI actually puts upon you as an investor. The second point, what you need to understand as an investor is that intraday trading is not permitted in the T2T stock. That means normally when you are trading into a T2T stock, most of the broking platform usually gives you an error message saying that you are trading into a T2T stock and you need to take a compulsory delivery of that particular stock. So you need to ensure that you have sufficient bank balance. You should have sufficient funds in your account to pay for the delivery of that particular stock. So in other words, when we say intraday trading is not permitted, it means that BTST, that is buy today and sell tomorrow, or STBT, that is sell today and buy tomorrow, is also not permitted on a T2T stock. Lastly, finally, T2T stocks is completely different from a Z group stock. Z group stock have fundamental issues. T2, T2T stocks are comparatively better than a Z group stock. When I should not say comparatively better, they are actually better than a Z group stocks. The criteria for T2T stocks I already explained before, and looking at those criteria, it doesn't seem that they have fundamental issues perspective. So when the stock is shifted to a T2T segment, additionally we have some circuit filters being kept on them, that is a plus or minus 5%. This will ensure less volatility in such kind of stocks. But nevertheless, the core business, the fundamental behind T2T stock is intact. Nevertheless, when I say the fundamentals are intact, it doesn't mean that you should not be studying or analyzing the financial statements of such companies. You should continue to invest your time performing analysis of the financial statements, whether it is the T2T or Z category or A or B category stock. Irrespectively, you need to do analysis of any kind of stocks. So that was it which I wanted to explain today about the T2T stock.